Hi, I'm going to explain a little bit about precision swing points, or PSP as we call it. This is from Trader Day, his quarterly theory. I'm in his mentorship, and he's mentioned heavily about market reversals, and he teaches about SMT, which is when there's a difference between very correlated assets. PSP, or precision swing point, is another version of SMT when there is a slight variation between two highly correlated assets. And I'm going to go over PSP and how I kind of look at trading it through my back testing and forward testing. So I just want to let you know that I created an indicator that marks these on the chart. So what a PSP candle would be is if you're comparing ES and NQ, for example, two very highly correlated assets that should follow together. When one of the candles is green and another is red, the indicator will mark it. So that is what's called a precision swing point. Now, there's a little bit more to it, like a highly or a better precision swing point is one that is actually a swing point, like it has lower candles to the right or higher candles to the right, as in this one, as like a swing low or a swing high. Now, whenever I see a precision swing point or precision swing candle, I pay attention. So even this one, this red one, that doesn't have a two lower candles beside it or two higher candles beside it, I still pay attention. So a precision swing point, basically, it means that a change might be coming, a big change, either in momentum or direction. And you can do this through your back testing. You could try it on all time frames. So just look up PSP quarterly theory on TradingView indicators, or you can just look at two charts side by side, ES and NQ. Similarly, you can compare like Great British Pound and Euro USD, or the Dixie versus Great British Pound. Uh, in that instance, a precision swing point would be when Dixie and the Great British Pound are both forming red candles. Then that would be a precision swing point. So as that's a little bit about precision swing point. And here is where I first learned about precision swing points. It's my notes in, it looks like February 2024, when I learned about it from Trader Day. So, precision swing point, let's just go over kind of my notes, my sloppy notes. Precision swing point is when one asset shows up as a closed candle and another an up closed candle and another asset as a down closed candle. With precision swing points, you don't need SMT. SMT that precedes the precision swing point just helps you. So say you see a bullish SMT and then you see a precision swing point, potentially that can tell you like, okay, now we're going to start moving in that direction of your SMT or your bias, what you're looking at, or in the direction of a uh, liquidity draw that you're looking at. So when you see both SMT and precision swing point, there's nothing more powerful than that. Okay, these are notes from a video from Trader Day. Especially if the swing point is formed within a gap, like a new week opening gap, or new day opening gap, or new month opening gap. So you should be comparing three assets if you're looking at futures and forex. So you could compare ES, NQ, and YM all side by side. And a more powerful precision swing point, or SMT, is going to be when it's between ES and NQ. But sometimes if you don't see it there, you might be able to compare the Dow or YM and see the change showing or presenting itself there when comparing, say, the Dow versus NQ. Um, so, what else? Here's an example. So this is a precision swing candle on ES on a daily time frame. So again, daily time frame, if you see a precision swing point, so this candle happened a while ago. It was a swing high, and then the next few days proceeded to go down. So it just shows you, okay, a change in direction might be happening after it forms. So it's good to pay attention to it. Um, So here's the comparison side by side. So NQ was a down close, a red down close, and ES was a green up close. And then we proceeded to do a little pullback into a fair value gap. Yeah. So let's keep going. I want to show you this in action. So, oh, also you can find this. So if you look up my Twitter, GGX Trades, search for things with the word indicator, and you can find that. I think this is on my highlights. Yeah, now it's on my highlights. So this indicator, I got a link to it. You can throw it on your trading view chart. All right, let's go into it. Okay, so this happened overnight. This is a 5-minute chart. So this is kind of how I see precision swing candles. So right here we had a large down move. Down move. Now again, precision swing points are giving an indication that things might be changing. Okay, either changing in momentum, like it's about to explode, or changing direction. Excuse me. So here we have a precision swing candle. On ES, we have green. It's pinpointed with the indicator. On NQ, it's red. Now you see we came down and then a change happened. This ended up being the low. Now, precision swing candle, I'll normally, you can mark it out. Okay. Now you want to think to yourself, okay, well, what is this going to do, or how is price reacting from it? Okay, so if we wanted to continue bearish, potentially this candle would hold price under it. So you would see things like candles forming down, and then maybe a pullback to it, and then continuation down. So you kind of want to having a sense of what's my bias, what do I think the draw is, are we pulling back to some moving average that we've been bouncing from? Could it be bouncing here, or is it going to continue down? So at this point, you have a green precision swing point candle versus a red precision swing point candle. Now, typically, what you're going to see is that the red precision swing candles, it's very easy for price to dip below it. Very easy. Now, if price doesn't dip below it before it goes above it on a red candle, so now a green candle, and you're going to see examples of this. On a green candle, it's very easy for this green candle to break its high. That happens all the time. Even if we're bearish, typically you're going to see it break the high and then come back down. Okay. Now, when you see a red candle breaking up, that is a strong bullish indicator, in my opinion. You might be thinking, okay, well, if I am bearish, do I want to keep being bearish? Could I be wrong at this point? So this one broke the top side first, closed above it. Now, if that is giving you bear or bullish vibes, or you are looking for bullish entries, then at that point you could start looking for bullish entries. And as you see, it came and retested near it, or actually basically retested the high of the candle, and that's all you got. That's the low. Okay. Um, and that just happened to be the low. Like it's not always going to happen, but you can see something did change. And PSP candles is that. Just think to yourself, we might be changing direction. We might be changing momentum. Okay. Now let's keep going. So we see another precision swing point. So at this point, if you're getting bullish, you could start treating this as like an inversion fair value gap. Okay. Right? And it ended up working, right? So now we're in the chop, okay? We see more precision swing points, these candles. These candles, let's see how it acted. All right, so this green precision swing point, like I said, it's very easy to break the top first with precision swing, a green one. And the red one is very easy to break the bottom first. So as you see, again, right here, one more time, the top was violated first. Okay. I'll make this just a little smaller. So once again, the top was violated first by a pip or by a tick. Okay. But you're getting into, okay, now we have a balanced fair value gap. We're holding down. Okay. You're holding down. Once again, another one. This one is kind of like SMT, right? So we have some bullish SMT. It's demonstrating that ES is actually stronger by holding there. Okay. So you might start thinking, okay, we have another precision swing point. Now, how did price act after it? Once again, it broke up first. It's much easier for a red candle to break to the downside. You'll see that a lot. You'll see it a lot, and I'll show you. Um, you might be getting bullish vibes now. So it's almost like buy the dip, buy the liquidity, right? I mean, potentially. So you could be potentially buying stop hunts, right? Or you could continue to scalp out of this inverted fair value gap. Okay. All right, let's keep going. All right, now we have a down closed candle. This is an example. Let me show you this. This is a very normal example of 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 a precision swing point that I might get bearish vibes from, you know. Um so at this point I might trim my stop loss, put it to break even. So you'll see right here, this green precision swing point, it broke to the downside first. So it broke the downside and it couldn't really break the upside. Now on this one as well, this one acted normal, very normal for it to break the downside first. That's normal. Okay. Now you are basically right here, we changed market structure. You might think, okay, well, I'm still kind of bullish, right? We changed market structure. We came down, we came back up, we broke the high. We got another inverted fair value gap here that we're testing into. So either you could trim your stops or you could um, wait to see what's going to happen. Now, it looks like we went under the precision swing point and then we built back up over it and found kind of couldn't even retest it after um, closing above it. So, but we are coming back into previous precision swing points. So I do like to pay attention to these. So now precision swing points, where you want to find value, like say you're bullish, where you want to find value is entering at the candle body low. So this is the candle body low or under it, right? That's just like deep value. You'll see that sometimes you get under it and you get back over it. Like this green precision swing point, you get under it, you get back over it. So that's if it's following your bias, if you feel like, hey, I got my bias, it's bullish. Value is buying under precision swing points. Okay. You're buying under it. So this one, they all gave you opportunities. Kind of like treat this as, turtle soup, right? This is your turtle soup area coming into an inverted fair value gap. You're under precision swing points. If you're scalping, you could scalp for profits at this level, right? Um, you could scalp for profits here. You could keep runners over it, right? You can also take profits at candle body tops. So it's kind of like premium is above the candle body and above the wick high, and discount is under the candle body and under the candle wick low. Okay, so let's keep going. Let's see how this acted. I mean, today was just super bullish. Now we're only looking at the 5 minute time frame. It's a whole different, it's all similar story on a 1 hour time frame, 15 minute. I like looking at mainly the 15 minute and the 1 hour, and then to see how price is reacting off of those candles. All right, let's look at this other example here. All right, so this precision swing point, this red down close candle, we see again, we broke above it. Eventually, we broke below it. That's cool. But we first broke above it. So if you're bearish, okay, that is like a discount area for you to short above the precision swing point candle. Now that gave you 46 ticks, which isn't bad, especially if you get minis. Take profits can be, under the candle. And if you're bearish, longer term, then, you can hold for longer, or start stopping out if you see price building up over this position swing point. Okay. So again, see this red down close candle? The red down close candle is kind of indicating that this is the weaker asset. Um, let's see. So this top here. Now, if I was bullish and I wanted confirmation that this wasn't a top, because right, it could indicate either A, we're changing momentum, or B, we're changing direction. Um, if I'm bearish, I don't want to see the top breached before the low. Okay. If I see the top breach and I'm bullish, then I might jump in. I might start getting in that at that moment. And I might buy more if it gives us the ability to buy under here, under the candle body. As in this red candle, it did give you the opportunity. Well, for a second, it was probably here for a half a second. After this closed, it came down for half a second and just ran. Um, yeah, and this is not doing the New York session. This was just overnight. So basically, you could kind of do a stop entry order if you're bullish, and you could go up there, but keep it small just in case. It's very common to see dips under the candle body to get that opportunity. So that is like partial, normal, precision swing point entry could be under the candle body or over it, wherever the discount is, depending if you're bearish or bullish. Super discount, if you're very confident, would be under the candle wick. Okay. This could be your buy spot. This could be your buy spot. Okay. Now, for stops, what I like to do is I throw on a risk reward fib level. I wrap it on the candle body. Okay. If you're getting down to 1.68, so go light, right? That's a big move, depending on how heavy you are. So about 1.68. This is where I'm like, okay, I am freaking wrong at this point. Um, so you could probably measure all these. These might have got down to 1.68, like if we take this for example, and it did. So at this point, you might be saying, shoot, I am wrong. I'll hit my stop loss. Okay. But then when it starts coming back to this area, remember, re-entry can be in these wicks. Okay. And this is getting really sloppy. But the bottom wicks are discount. So if it gives you the opportunity to come back in and you think, okay, well, the draw is still above. We didn't go down too far, and you want to get a retest, you can come back in these wicks or under the wicks. So once you come back, you see that say market structure shifted. come back with buy orders under the wicks, and you would have had very decent um, risk reward because it barely came down after that at all, just 1 point. All right, so let's keep going. Here's some more examples of here's a very normal precision swing point action where the red candle broke the low. This is what I mean by if the red candle breaks the high first, then you know, okay, you might be wrong on your bearish thesis. Okay. So this one broke the high first. This is normal, right? It had an inside candle, almost broke the low, and then it broke the high. That's normal, and this is quite normal. So if you're still bullish, or if you want to do a bearish scalp, this is very common that you're going to get priced to come under that red precision swing point. And then as you see, it just came down to a fair value gap. This is another version of SMT. So this fair value gap here is tested. And then this one didn't get touched. I think it got touched later, but at this moment, you're seeing that ES is the stronger asset. And it gave you a buy opportunity under this candle body. And under the wick. Okay. So now is something changing here? Maybe. Maybe this is where there's a pullback, but let's see. It was really strong, so maybe it didn't. But let's see what happened. Yeah, there. So this could have been indicating, hey, there's a change in direction. There's quite a little pullback here. Let's keep going. Came back, so it's retesting that precision swing point. It's back in it. Let's keep going. If you're bearish at this point, this top of the candle body is the discount area. Okay. So instead of buy spot, sell spot. If you're bearish, you want to sell above the candle body or above the candle wick. Let's keep going. So let's see. Came back over it again. NQ is the weaker one. As you can see, like the thing with the red candle, that is a slight indication that it's the weaker asset at that time. And as you see, it had much more of a pullback. It even came back and tested this precision swing point. So if you're really heavily into buying at that date, so you can pay attention to like, okay, well, pullbacks I would like to buy might be in this area, right? So let's see. Let's just see how the day played out. I bet you that holds up. So again, hey, we're seeing SMT. This is bearish SMT. Okay. This is showing that NQ again is the weaker asset. It might come down below this low, but let's see. It did. Yes, not quite, but it might get down there more. Okay, it's coming. Look at that. Yep, it came down more. So do you see how this precision swing point kind of showed you that stuff is changing? Either momentum's changing or direction's changing. If we're extended, be prepared for the pullback. So either tighten your stops, take profits. Let's keep going. Let's see. Let's mark this as the buy zone. This is the similar PSP candle comparing to this one. So if you're bullish and you want to pull back, this could be where you want to pull back to purchase from. Okay, it's under the candle wick now, under this candle wick. So that is super duper discount for bounces. And it looks like if you want to sell above the precision swing point, you got 55 ticks there. If you want to sell a new high, you've got 181 ticks. If you want to sell halfway, you got 100 ticks, which is good money. So, and you could say, well, I want to have my stop losses be here and then just play accordingly, right? With whatever size fits this. So let's keep going. Okay. This guy touched the tippy top of it. Okay. I don't know. Was that the low today? I'm not sure. Let's keep going. Look at that. You're just making money. Look at that. If you have the right bias, you're making money and you see where the discount is. Like if you have multiple precision swing points, there's a lot of liquidity under there for some reason. Like price will respond to it. So you're buying under it. That is like super duper like, oh my God, pay me, pay me my money. That's your pay me my money zone right there. Look at that. And I mean, the best thing is to not knife catch. It's to see how does price respond to it, right? Am I making candle closes? Should I buy order blocks? Should I buy this as an inverted fair value gap? Um, right? So here, maybe we thought it was a buy and then it hit our stops. Who knows? Let's keep going. All right, so we just made a ton of money, right? We're making new highs. Now, also liquidity over SMT, like this is like, okay, this is an amazing target. There's a lot of reason to get the high of candles that form SMT. That is a great money target. If you feel like, okay, we're going to take some highs here, that is a great target. Okay. Kind of like final take profit area right there. Okay, there you go. You just made it. Look at that. We found our buy zone. We don't need to knife catch. We see how price reacts, right? Price coming back up. Get our buy zone. Get back in these dips into the buy zone, right? You could even care about 50%. You could look at 68% and then yeah. So let's keep going. Like let's see what happens on our next precision swing point candle. There's some difference here. Look at that. You got a little SMT. Now, I really only care about certain SMTs. I mean, mainly at certain times of the day, um, at certain hours. Let's see. So look, it formed SMT and it took its liquidity up there. This one, not yet. So there you go. It is a bearish SMT too. Nice pullback after it. Here's what you call SMT fill. This guy didn't touch the bullish SMT. This one did. Okay. So this at the moment is saying that NQ is the stronger asset. Now we're up in premium. Like, do you want to buy here? I don't know. You depending. I would if I saw a precision swing point and I saw value buying into it or under the candle body, then I might. Look at that. So I guess maybe some news came out 8:30. So again, we took another SMT liquidity, right? Good target if you're bullish. There's a precision swing point. Now it's like, okay, well, what is happening now? At this point, you're seeing SMT. I would kind of say I might be bearish, but one bullish factor here is that this red candle broke the high first. And I've been noticing like, all right, I'm not getting bearish vibes if this red candle, PSP candle, is breaking up first. It could be just like a very value entry for a bearish scalp short, but let's see what happens. Because if you're bearish, you want to run the bottom of it pretty soon. It doesn't. So this gave you only discount buy entries. So at this point, you would be like, okay, well, if I am bearish, which it did show some SMT, if I really like going short, then I'm going to measure this and I hit my stop loss, right? We're not going to be right all the time, of course. So that happens. And if you, depending on what's your bias for the day, so this thing, like, okay, where's ES running to? Where's NQ running to? Look at this. So does it want to get this high? Does it want to get this high? If it's running to these highs, if this is the draw on liquidity, maybe you don't want to start shorting right there, right? Um, maybe ES wants these highs. Maybe you don't want to start shorting here. Maybe you do want to look for bullish entries, right? And if this isn't the discount entry you want, if you want it lower, then you buy lower. Or if it runs higher, then this potentially could be your your buy zone for later if it dips back in it. So let's make another buy zone. So let's keep seeing what we see. Let's just play this out. Okay. Well, it ran away from us, right? Thank goodness we had our stop loss if we're bearish. Oop, running back down. Oh my God, this must be market open. Right before market open. Holy moly. What happened? Okay, I don't know. That is some deep, deep movement there. Well, okay, let's see. So that's the open. Oh yeah. So I think this is like the lowest dip, I believe. So here's the thing. So you see all this, right? Compare this area to ES. So this as well is SMT, right? You might think, oh shoot, we're very bearish, right? That dip. But you got to see, how does price respond after this? So let's keep going. Okay. Holy moly. Came back up. What a roller coaster. I want to see when the next precision swing point happened. Coming back into our buy zone, right? Or back here. This guy's just running. Um, Another SMT, right? Here and here. So at this point, I might be like, okay, I'm a little cautious. I want to kind of watch for my stop loss to come up. I want to see precision swing points to see what's happening. Okay, here's a precision swing point. We're coming back into older buy zones. We took this low. We formed bullish SMT. Now, at this point, usually after you see bullish SMT, this should activate basically um, the bullish movement. So let's kind of see kind of what price does. Now, it probably popped up first, which that's normal uh, green bar PSP action. It probably popped up first, then did a pullback. This guy, it did not get under it. So again, think maybe bullish vibes. Let's see what the next candle does. Yep, it popped up above it first. Okay. This one came below it again. I am definitely getting bullish vibes after this because it's breaking it. higher or breaking to the top. Okay, let's keep going. But now you see NQ is the stronger asset. Now, discount purchases would be under this. Right now, we are quite high in this whole zone. So if we throw like a fib on it from here to here, all right, the 50% area, you definitely, so buying under this PSV candle might be a good idea. We have our bullish SMT. Let's see what happens. Okay, it's coming under it. Not quite. Didn't quite get there. Okay, there. Potentially that could be a buy spot. Okay, you're seeing a little bit of more. This is bullish SMT. This is actually showing you that ES is more bullish. This might be like, okay, make some purchases. You're dipping into a PSP. You're making a bullish SMT after another one. This might be like, okay, pay me some money. Let's keep going. Ooh, dipped a little more. Dipped into the PSP. Got under the candle body. This is a very decent buy spot. Okay. So I have a problem with chasing. So really the value, you want to look for value entries, which is under the candle body or under the candle itself. So like this would be a buy spot. Okay. NQ gave you the buy spot. So let's see what happens. Came up nicely. ES is responding well. Very well. It's kind of responding out of this inversion fair value gap. This guy's just running, so that's good. Running, new high. Can't hate that. Could be taking lots of profit by then. Here's a PSP. Look at that. So it's another PSP that happened after bearish SMT. So right here, NQ hit the high, took liquidity. I know I'm talking too much. This is getting too long. Uh, this actually isn't. This is kind of bearish SMT. So this one didn't make the high. Sorry. And then this one made the high over this comparable candle. Okay. So yes, that's bearish SMT. Now at this point, if I see this PSP, I might be like, okay, I better take some profit. Okay. See how this red one broke below? Normal. Green one broke above? Normal. Very normal. That's normal PSP action. So why I get bullish vibes if it breaks above first, that's the reason. And usually indicates more bullish price action is coming. Check this out. So from our buy spot, we could have bought this inverted fair value gap that's in the candle wicks of PSPs from before. And then we get, what do we get? 100 ticks, get your new high, 150 ticks. That is a lot of money. Okay, potentially. This could get us out. Okay, and we stay maybe green, break even. So you would see this PSP form, price closes here, you'd get out. You'd be green because you're buying in discount, right? So let's keep going. Let's see what price did. Dips. Ooh, made a new low. That's interesting. Now, again, you're forming bullish SMT. This is making a low. This is not. Now, what Trader Day says is that you see SMT. Now, only consider it activated when you see a PSP candle. So let's see. All right. Do we see a PSP candle? We do. Here's a PSP candle. So that potentially could be buyable. And then what do you want to buy? Like, look at this. You're in the discount for NQ. You see this. It breaks above the red PSP candle. Very, very common for it to break below. Very uncommon for the red PSP candle to break above first. Then you could be thinking, okay, well, what are buys for me? This could be a buy, the top of it. Oops. Let's go the top of it, the top of the PSP candle, the bottom of the candle body, and then below it is super discount. Okay. Now you would want to throw a fib on it. Now, where's my stop loss? All right. So my stop loss would be pretty tight. So, I mean, potentially, hopefully, we don't get stopped out on this example, but you can always rebuy when you come back in it. You're in discount still. So let's see. Did it give us even an entry? Doesn't even give us an entry. So at this point, you're like, okay, shoot, another red candle broke above. Potentially, you could be scalping from the ES. This is the stronger asset, but you are in a premium, so do with that what you want. Um, you could be looking for more buys, which would be at the top of this candle body. But again, we are now in premium, so it's up to you. Keep it small. You would have your stop loss on the fib 1.68 under that. So you do get a dip in the buy spot. You are under another PSP candle, which this top hasn't been taken. This could be liquidity or a target for you. Okay. Which it runs it, comes back down to the candle body, which could be a buy spot. There's another one, right? There's another PSP candle, breaks above, which is normal. Check out this one. There's the red candle, breaks above, which is unnormal, showing very bullish momentum. So you could buy back into the candle body for scalps, back into the candle under the candle body. Look at that. Just gives you a very small wick under it. Okay. So I think that's enough. That's kind of how I look at PSP candles. This has been a lot. Let me know if you have any questions. You can follow me on X. You can shoot me any messages you want and ask me any questions. And I hope this is helpful so you can understand more about precision swing points or PSP candles. And thanks. Bye.